Thanks, Cindy. And I mean, really, the good news on electricity is whenever I do an electricity presentation where I don't go after Tim, my presentation is really going to start with a lot of the same information. The markets are very highly tied together, so the good news on gas overall, really leads you to good news on electricity. But the electricity markets don't have some of the same transparency that the gas market has, so I'm going to give you a little more insight into what's going on with electricity pricing and some of the specific fundamental factors really affecting the New England region and Massachusetts in particular. So when we look overall again at your overall electricity price, the biggest piece of your price again is that wholesale component, the generation. And when we track these prices over time, basically pricing right now is very, very low. So what I'm looking at in this chart, this analysis is showing around-the-clock power prices for varying terms. Now, it's been talked about before. It's not the amount you use only, it's also how you use it. So that, of course, is going to have a big impact on your price. This chart is tracking wholesale prices for a flat block. Your price, of course, is going to be different, but it's still going to trend in the same way with the wholesale market, which is always moving and very low right now. So, for example, here, I've broken the prices out for 4 different years, a price for 2013, 14, 15, and 16. And the current price is that's the price of a wholesale block at Mass Hub. That's a key trading point for New England electricity. You see $38.48 a megawatt hour, or about 3.8 cents per kilowatt hour. If you would track that price every day going back to Jan 109 through last week, the price today prices have been lower than today's price 0.8% of the time. So over those 3.5 years, prices have been higher than today's prices 99.8% of the time. So bottom line is prices right now are very low based on history here overall. You can see for the other years, 2014, 15, 16, those percentages are also very low. We're very much near the bottom of the historical range. Of course, we can't predict the future, well, we can try, but we can't guarantee the future, but we know where prices are and we know where they've been. So this shouldn't come as a surprise to you. Prices are very low. The other thing you can see on here, if you look at the current price for 2013, the price for 14, 15, and 16, the further out you go, prices are higher. And this is really reflective of the trend in the gas market as well. We call this a contango market, or a contango forward curve, where the pricing, the longer if you do a 1-year contract versus a 2-year or a 3-year or a 4-year, the longer term prices are higher than the near term due to some of the fundamentals in the market right now. So again, no surprise here, we look at the correlation between gas and power prices. In this region, almost 50% of your generation is natural gas. The next biggest piece is the nukes, and I'm going to talk about them more in a moment. The nukes are around 30%. But you can see this very strong correlation here between Mass Hub power prices, and I can tell you, you look at other specific transactional points depending on your facility's location, the trend's going to be very similar here. Versus the NYMEX prices, very strong correlation going back all the way here to 2010 or before. You see a little bit of an anomaly coming in, or a jump in the power prices back March of 11. That was due to Fukushima, when basically what happened was, as Japan lost those nukes, Japan all of a sudden had to make up for lost nuclear generation by importing more LNG to basically generate more electricity via natural gas. One of the few regions in the country, in the United States, that still has some reliance on importing LNG is New England. So that affected basically the regional gas basis here moved up, and we saw a little blip in the power prices moved up relative to the NYMEX. But you still see beyond that, the overall trend is still very, very strong. But it's something certainly to be aware of, that it's not just the NYMEX driving your price. And this chart really provides some more detail on that. The chart on the left is a heat rate chart. And for the purpose, heat rates can be used for a lot of different things, looking at specific power plants. But for my purposes of this discussion, it's really just a relationship of the regional power price divided by the NYMEX. And what you can see here is over the last year, the relationship of the power price to the gas price has been rising quite significantly. So again, that's why when gas price has been falling, the power prices have been falling somewhat less. So it's due to both that regional gas basis that I talked about. Regional gas prices have not fallen as much as the NYMEX. And then also when you look at generating power, If gas prices would go to zero, electricity is not going to be at zero. There's still non-fuel costs within generating electricity. As power prices have fallen, the share of the power price that the non-fuel has grown. And that combined with the gas basis is one of the reasons why we've seen these heat rates rising. And you can see on the right, as far as the decline, the data in red is the decline in regional power prices on the wholesale level compared to the decline in the NYMEX. And you can see that the power price has been dropping dramatically, but just not as much as the NYMEX. Since April 18th of 2010, so basically over 2 years, you see that the power prices dropped 31%, while gas dropped 46%. So if you have a strategy which is basically timing your power purchases just based on NYMEX gas moves, again, which is the most liquid market and very transparent, it's easy to watch, but you don't want to assume that power is going to move down exactly in line with gas, because there's some other factors at work here. Now let's talk about the nukes. Again, the nukes are about 30% of the regional power supply in New England. So there's been some concerns, especially after Fukushima. You have countries like Germany and Switzerland looking at really getting out of this market completely. So Vermont Yankee is one of the four nuclear generating plants in New England. And basically there's been a fight between the state of Vermont and the Nuclear Regulatory Commission. Nuclear Regulatory Commission extended the license. These plants generally have licenses that may last 10, 20, 30 years. They extended the license for this site to keep generating, while the state of Vermont wanted to shut it down. So there's a lot of risk here. And if you, again, considering that 30% of the generation is coming from the nukes, if you lose one of these four sites, that can have a big impact on both the wholesale prices as well as the reliability of the grid. Well, basically at this point, it looks like this battle is being won by the NRC, and this plant is continuing to operate, so that's basically good news for your power prices overall and the reserves in this region. Pilgrim's another site. Their license is coming up in the next 6 months. At this point, we expect that their license will be extended. There's always some opposition to the nukes, but there's really nothing out of the ordinary as far as the outlook on Pilgrim. The other two large sites, Millstone and Seabrook, they have normal maintenance coming up this fall. Since Fukushima, it seems like nationally the trend has been that some of this maintenance has been extended longer than usual, just due to overall safety concerns, but really nothing out of the ordinary with those two plants. Now, one area of your cost, which is, I think, in a number of the panels has been discussed, is really the renewable component. So that wholesale energy prices, of course, are down. There's the renewable initiative in the state of Massachusetts to basically get to 22% or 22.1% renewable generation by 2020. And they break this the ability to meet this into two classes of resources: the existing resources from before this program to the new resource, which is called Class 1. You can see here on the left, the Class 1 requirement is moving up every year. So as far as the share of your cost that is renewables, just by the fact that as your energy supplier, Direct Energy, has to buy more renewable energy, that piece is going to go up. But not only is the share going up, you can see on the right, the price of the Class 1 has also risen. Just in the last year, has risen from under $20 to close to $60. So significant movement up. Now, again, it's still only down, 5, 6, 7, 8%. But depending on the type of product you're on, if you have a fixed adder kind of product and you're floating the energy, that adder, that non-wholesale piece, is definitely being impacted by these renewable requirements, and it may be by as much as 2 to 3 mils, so $2 to $3 a megawatt hour. So, overall, from the outlook perspective, power prices are low because gas prices are low, and that's a very good story. Again, we've seen some different movements in power versus gas, but trend-wise, they are very low. When I say power prices are higher for the long term, that doesn't necessarily mean that I am bullish necessarily, but based on prices right now, the price for 2014 is higher than 13, 15 is higher than 14, and so on. I think when you guys look at the way you've been contracting, if you're coming off a long-term contract, 3, 4, 5-year contract, your next contract is almost undoubtedly going to be significantly lower. But if you've been going year to year to year, it's almost, the best strategy the last few years has just been to wait. The markets has just kept falling. And I think, again, maybe again, this is my opinion, maybe not officially Direct Energy's opinion, but when you look at the market, as prices keep going, when you see producers starting to react in some ways to low prices on the natural gas side, the amount of downside is certainly limited. Again, there's always risks out there in the market, so it may not be as much of a slam dunk to say always, well, we're going to keep seeing this never-ending decline in your price year over year. So when you're setting your budgets and looking at what price to lock in your contract, your price for 2014 might be higher than 2013. That doesn't necessarily mean it's not a bad buy, considering that both those prices are probably 50% of the rate back in 2008. So it's something just to consider in your overall strategy, that the market's downside is just dropped so much is just more limited than it was a couple of years ago. EPA rules, Tim talked about those. Really, there's with just a small share of the New England generation via coal, there's less direct impact on the generation stack in your market. But of course, the overall EPA rules can have impacts nationally on natural gas prices, and thereby impacting, one of the reasons why the long-term gas prices may be higher than near-term is eventually implementation of CASPR and MACT and some of those other EPA rules. Again, nuke outlook, that's been a good thing, and I think that's contributed to the capacity prices, which again, the rates have been falling as far as capacity and been clearing near the floor because there's sufficient reserves in this market. So that piece of your overall price has been less volatile than certainly some other markets. If any of you have businesses, down in New York, especially New York City markets and other parts of the country where capacity has been stronger. But the renewable piece is something else to be certainly be aware of. That one piece of your price may be moving up. Okay. Now, one other thing I want to just talk about briefly, Direct Energy has a very active regulatory team following, legislation both from awareness as well as advocacy, and they wanted to make sure I brought up this Senate Bill 2214, which passed the Massachusetts Senate on April 5th. Now, basically, this was kind of an update to a previous legislation, 2200. There's a couple pieces here, really. The net metering, the property taxes, really property taxes for renewables generators, and treatment of hydro as renewable. Those are really much more focused on those renewable participants in the markets, those generators. But this long-term renewable power purchase agreements, this is a piece of this legislation that they thought is important for you guys to be aware of. And basically, the original version, 2200, what it would have done is it would have, the utilities could have gone out and done long-term agreements to go buy long-term renewable power, 10 years or so. And basically the cost of this then would have been passed through basically to a tax to your suppliers, such as Direct Energy or the retail suppliers, then passed on to you. Now, again, we thought overall this was not necessarily a good thing, considering that really there's already that RPS methodology to get the state to 22%. So there's already a way to get to 22%. Why are we making it more complicated and adding another tax to kind of get there when there's a mechanism in place? And also, again, by having the utilities go out and buy this power, it's really now it's taking that control of how the control is now put in the state's hands versus really in the market participants' hands of how to reach that overall threshold. So now the updated version of this, right now it's basically giving them 12 months to evaluate whether or not they're going to have this proposal, this method. So right now this is not certain to happen, and of course this still has to go to the House. So it hasn't been passed at this point. We expect probably more news on that probably in May or into the summer. Okay, that's what I have for you today. Little late for lunch here, so but I don't know if open up to any questions for Tim or myself.
Yeah, thanks, Han. Maybe we'll allow one question. Before we go to that, I just want to clarify one thing about that legislation, further update. The whole central procurement of long-term contracts for renewable power did not end up in the Senate bill that passed, and there is a study? Oh, there is a study. Okay, right. Yeah. So, but appreciate you mentioning it because it's an issue that Power Options is very much tracking as well, because we don't think it's a good idea to do that, and because of the impact it could have on our customers because of the risk that it places on our supplier in terms of trying to manage those costs. So anyway, any questions from the floor? Okay, great. We are having lunch next door.
I was hungry.
Huh? Oh, yeah.